Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. We have David Chao coming up next, global market strategist, Asia Pacific at Invesco, to make some comments here on the markets. David, thanks very much for joining us. So we were just hearing there about some of the churn that we've seen in markets, the rotation underway on Wall Street. I'm not sure if that's completely the picture elsewhere, but let's start there. Do you like that rotation?
I do like this rotation because I think that we've certainly hit the peak of expectations for AI. Kind of this AI euphoria is taking a bit of a breather, and that's because perhaps the productivity gains that were promised with this new technology have yet to be seen. There's recently been some reports casting some doubt on the ultimate impact for AI, but I still am a firm believer in AI, and I think that the effects will take a little longer than expected. We have to look back past technological innovations. Things like the steam engine took 70 years to fully be implemented and see gains in the economy. The dot-com boom took around 15 years. So I think that it could take perhaps a couple more years before we see the full impacts of AI. And I think that this will continue to be a very dominant theme. But right now we could be in this kind of a plateau period.
This rotation that we're seeing, I wonder whether or not the earnings season might turn this trade on its head if the earnings from those laggards don't match.
Well, I think that we've continued to see earnings upgrades in almost all things AI related, and I don't think that that's going to hit a pause button anytime soon. If we look at
no, David, sorry, let me cut you off because I wasn't really talking about AI. I wanted to go back to the rotation trade for the moment, and one of the things that we might see from the earnings season, which is upon us now, is that some of these companies have bounced 10-15% in this rotation, won't have the earnings to actually match up with the gains.
Well, that's yet to be seen. So far, earnings from the financials in the U.S. Have been stellar due to trading revenues, and I think that's a good indicator in terms of kind of the health of the earnings season. Earnings estimates overall for the S&P, have been okay so far this year, and I think that earnings are going to look better next year as kind of the U.S. economy slides from kind of more of a contractionary to more of a recovery stage later on this year.
So in terms of the AI trade, we know the big companies providing chips like NVIDIA and Broadcom and others have performed very well. Do you expect them to continue once we see earnings in this quarter? And then how do you look at some of the other beneficiaries of the AI trade in terms of making your approach on portfolio construction?
Well, I think that this continues to be the most exciting investment theme that we have seen in a while. And I think that AI will continue to be very dominant. And I think that it will be the principal reason why U.S. stocks should rally next year. I think that this has kind of a multi-year tail. Now, that doesn't mean that it's going to be a smooth slope upwards because we're going to enter a period where there continues to be some doubts as to what the overall impact for AI is going to be, in terms of improving productivity for companies and for the overall total factor productivity for the American economy. But that's not to say that that earnings estimates could be a little bumpy for the time being. Perhaps similar to electric vehicles, we have early adopters that first spent money and the capital expenditures to get there, and then there's kind of a wait and see period, which I think we could be entering into AI perhaps later on this year before that trend starts to reaccelerate again when the technology becomes more mature.
Yeah. Okay, so stick with that momentum trade. Another momentum trade is Japan. How do you like Japan going forward? And let me just throw a wrinkle in there. If we do see rates starting to head up from the BOJ and the yen strengthens, can the equity market handle that?
Well, we're becoming a little more selective with Japanese equities given the performance levels that we've seen both last year and this year. And this is what I like for Japan. I would continue to like financials in Japan because bank stocks are likely to benefit with the BOJ hiking rates perhaps as soon as in a couple of weeks, and then one more time in October. But at the same time, inflation is picking up in Japan, and that's going to continue to put pressure on domestic consumption. And because inflation is going to outweigh wage growth over the summer period, and I think that domestic consumer-related companies could take a hit. But at the same time, we like real estate because rates that real rates continue to be negative, and who benefits the most in terms of negative real rates? So that's developers, construction, and real estate.
Just a quick kind of fundamental question. How easy is it for foreigners to buy real estate in Japan?
Well, there are certain investment opportunities where you can invest in the land and build your property. There are apartment buildings that you can invest in. So it's much easier to invest in hard assets in Japan than in other places in Asia.
Okay, so it brings us to China. This is a big week there with the third plenum underway up in Beijing. Are you expecting any broad changes to come out of this meeting? And if so, what will they be and what would you like to see?
Well, I don't expect any material changes or reforms to be brought. These are kind of like a more medium to longer term economic policies that will be hammered out. So I think that I don't think the market is expecting any kind of near term policy changes either through things like monetary or fiscal stimulus. That's likely to come perhaps at the end of July in the Politburo meeting. But during this third plenum this week, we look to see if there's any kind of tinkering around with tax reform or the hukou or the household registration reform, or local debt forgiveness or restructuring reform. So I think more so to do with these kind of medium to longer term components of the economy.
Might we have seen a bottoming out of earnings?
Well, we've seen a very long stream of earning misses in China. And I think that with current valuations at these levels, I think that the chances for a positive surprise are greater than a negative surprise. I think that expectations are so low at this point, and so we're cautiously optimistic that we'll continue to see more stimulus come out over the next month or two, because the first quarter was pretty good. It exceeded expectations in China for GDP growth. Second quarter was a bit weaker than expected. So I think that means that we'll see more stimulus efforts in the third quarter, which means that Chinese equities are likely to rally.
All right, David, thank you very much for being with us here live on the program. It's David Chao, Global Market Strategist for the Asia Pacific at Invesco. Joining us now is Mike Dickson, Head of Research and Product Development at Horizon Investments, to take a closer look at markets. Well, I think a lot of people would champion this, Mike, a broadening in the market. But if you really boil it down, it's kind of like selling quality stocks and buying lower quality stocks.
Yeah, I mean, when you look at the economic data that we've gotten recently, it certainly makes sense. We're basically just staring this Goldilocks soft landing right in the face. And I think this inflation report that we got just last week was obviously super important for that. Over the last 5 days, you've seen a historic outperformance of small caps over that tech-heavy Nasdaq, and we think that that's very much warranted, given the fact that the market's fully pricing in that September cut, and the data firmly supports that, especially with strong retail sales. And I hear you talking, of course, Amazon Prime Day. The consumer is very healthy right now.
I wonder, though, if the earnings season doesn't turn this trade on its head, because you're going to get from the likes of NVIDIA and Broadcom and AMD and others like Qualcomm, you're going to get stronger. And we haven't had any warnings or any indicators that, that this thing is sagging. Do you think then that, this will see money flowing back into them?
Well, it's certainly possible. When you look at earnings estimates, they have creeped up a good bit. So there's certainly a lot of expectations kind of already built in to these names. But when you look back the last couple quarters, they have more than delivered on surprising to the upside while also providing that forward guidance of growth that has kept their momentum going. However, when you look just more broadly at the market, as the big theme this year has been just massive concentration. And I think it would actually be quite healthy if we saw a little bit of a pause in some of these mega cap names and allow the rest of the market, such as small caps, to catch up, because they have just been getting absolutely crushed compared to those big mega cap counterparts. So that would be a really healthy leveling out of some of the market sentiment lately.
Shed some light on this. I'm a little curious because we know that the stock market is a forward-looking indicator, and we know that investors have been looking forward to rate cuts from the Fed for a very long period of time. We've seemingly known that those cuts are coming. It seemed like a hike was, out of the story for a considerable period of time. And since we've already known that, then why all of a sudden this change?
Well, when we look at the reaction, at the overall market level, I don't think it's mattered that much. I mean, for example, just overall S&P is up nearly 20% on the year, and if you look at the 2-year and the 10-year, we're still a little bit up on where we started the year. So we actually haven't net had help from falling rates to get the market where it is here. But when you look up under the hood, there's been, that massive divergence. And so, take some of the, blue chip, just large cap dividend payers. I mean, they're barely up on the year. And then, of course, the small cap companies, more cyclical oriented financials, and a lot of the stuff that we've seen doing really, really strongly over the last 5 days, because now we actually have a high level of confidence that these cuts are actually coming. And the Fed is also, Powell's been very aggressive about saying once they start cutting, they want to have a series of cuts, and they don't necessarily want to do a cut pause situation like what's happening in the Eurozone. So I think that's this case.
So given all that, what do you want to jump on in the short term versus being patient on?
Well, I think it definitely warrants broadening out the portfolio a little bit right now. I don't think it's quite time to go all in on the reversion trade, but taking some profits off of the mega cap growth and tech companies and redistributing that to the more domestic focused small caps that have proven to be a lot more sensitive to rates. I think that would be warranted right now, given the data flow that we've seen. That said, heading into earnings season, I don't want to completely discount the momentum and the growth rate that those mega caps had, right? So, I think it's time for a half step or a quarter step to rotate into some of the laggards on the year. And we're going to have to see if they really prove it through the next couple weeks, whether or not those valuations are warranted and those growth metrics are, going to be delivered on.
So we've seen yields drop pretty significantly here. The 10-year yield down to 4.16%. The 2-year was, up over 5%, now at 4.43. Let me posit this, and you can tell me whether or not you think it works. That the bond market is sending us a signal. It's telling us that no matter who wins the presidency, next year the fiscal input is going to have to be less. We just cannot keep running debt and deficits like this. Is that part of the story?
I think it's a little early to be allowing the election necessarily to have an impact on asset allocation at this moment. When it comes to the election, there's a lot of policies at play, but this election season is far different than what happened back in 2016, because back then Trump was not expected to win. And no one really, the market did not expect that to happen. And his policies at that point in time and their impact were relatively unknown. Well, now we've had, Trump presidency, exactly who the benefactors are going to be. But when you look at betting markets and what the market expects as of today, I mean, Trump is very much kind of expected to be the winner with what we know now. So it's uncertain exactly how much of that is already in the price. And as we know, markets are going to respond to what happens relative to what's in the price, not necessarily just based on what happens. So we're going to have to watch that carefully. I think it's going to be a lot less clear this time around what the actual reaction is going to be.
Mike Dickson, Head of Research and Product Development at Horizon Investments.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
Good morning. It is 9:43 p.m. on Wall Street, 9:43 a.m. here in Hong Kong, where I'm Brian Curtis in Hong Kong. It's time to check in with Bloomberg Opinion. We're joined by opinion columnist Minxin, who has been writing about U.S.-China relations. In light of the presidential elections, we thought it would be a good time to take a closer look at some of the policies that will be coming from former President Trump and President Biden on China, on the region, and on Taiwan. Minxin, thanks very much for being with us. Trump is cool to the idea of protecting Taiwan from Chinese aggression. But I see from the reaction in the Taiwan market this morning, we're only down about 0.25%, that investors don't seem to be too worried about it. Should we be?
We should not worry very much about what Trump says. He keeps saying one thing and then doing another. So he's totally unpredictable. And I think most people do not believe at the moment in what he says. So the market is reacting rationally.
Well, particularly in an area like that. But I think we can believe that he would like to slap 60% tariffs on China.
Oh, yes, I think so. Trump has this sort of double-sided feature to his policy. On the one hand, he's very tough on China in terms of trade. He wants to cut China off from the U.S. market. At the same time, he does not care that much about China's military might, especially where Taiwan is concerned. There are inconsistencies in there because in his heart, Trump really does not want to see China strong and powerful. And if you see Taiwan to China, then China will become even more powerful than it is today. So at the end of the day, I think Trump will probably be tougher on China where Taiwan is concerned than what he sees.
I mentioned that Trump is cool to the idea of protecting Taiwan from China. He's also cool to any American efforts to punish Vladimir Putin. Is that something that will further distance him from Europe, for instance?
Oh, yeah. I think the war in Ukraine is much more urgent. Whatever we say about Taiwan, let's be clear, there is no war there, and we have not seen China making comprehensive preparations for invading Taiwan. By contrast, there is a raging war in Ukraine that endangers Europe's security. So if Trump stops U.S. support or cuts U.S. support or forces Ukraine to make a deal with Putin to Putin's advantage, then I think Europe will be very, very worried and upset.
Now, Bloomberg is a very serious news organization, and in the paragraph after the paragraph in our piece in Business Week about Trump being cool to protecting Taiwan from China, we write, and Trump, in parentheses, who has a proclivity to lie, insists he won't pardon himself if he's convicted of a federal crime. You know, that's a very strong statement by Bloomberg. Have we ever had a candidate that such things were said of?
Yeah, well, on Taiwan, I do not know what exactly he says. So let's just look at Biden, a proper guy, what we consider honest, whatever you want to say about his aging-related issue. Biden has said 4 times that the U.S. would defend Taiwan, but then his advisors would walk back. And when you look at what Biden has said most recently, it actually is different from what he's been saying before. So on Taiwan, you can see people all over the map. So I think we have to sort of take a step back and wait to see what exactly happens with regard to Taiwan. And I think U.S. policymakers, the president on down, will make their decisions depending on the circumstances.
Just briefly, we had J.D. Vance talking about how China was the number one enemy of the United States. We know that vice presidents don't generally make policy, but is this pairing together the two of them going to be worrisome for China?
Oh, yes, they're going to. China will be very worried about this pair because because Trump is very tough on trade. And if Vance says China is an enemy, that means that you're going to be tough on China militarily. So this is not going to be good news for China. And I think the Republican leadership they need to keep their rhetoric down. It helps nobody. If you be very tough and you don't do much, then you lose credibility. So I think they've got to watch what they say.
We've been asking all these questions if he wins. Of course, this is predicated on if Trump wins. So let me put it to you, Minxin. Who's going to win?
Nobody knows. Well, I think it really depends on what Biden does right now. Trump is riding high, but still 3.5 months until election happens. So it's an eternity in politics.
This is one dodging of the question that is totally justified. Thank you so much, Minxin, for joining us. Bloomberg Opinion columnist Minxin Pei. You can read more on this and other stories from Bloomberg Opinion at bloombergopinion.com/opinion. And you can go to the terminal and type OPIN GO. This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.